D-Gens, what's up, guys? How's everybody doing out there today? A little bit of a red portfolio, a little bit down, a little bit depressed. But what the hell are you looking at your portfolio for on a red day for? Come on, act right. Right? Come on. Put your portfolio away today, guys. Unless you're buying something, doesn't matter what it looks like, right? Does not affect our timelines at all. What do we have with Jasmy right now? 3 cents, 822. So got to get back up over this level here for support. We'll see where the candle closes. Got about 4.5 hours before that happens. So, yeah, but look at us inching closer and closer, inching and squinching to the 100-day, passing over the 200-day. But it seems to be delayed because we keep coming down. We need a good couple of days of green action here to get this golden cross to take place. But till then, we'll keep watching. So for me, I mean, just kind of sideways, guys. Bitcoin dominance, we're going to get into it a little bit later, but Bitcoin dominance is kind of on the rise right now. So, I mean, until that goes back down, altcoins are just going to start to chop sideways here. We'll see some of them will start to melt up again as Bitcoin starts to regain traction and stuff. But for right now, that's what it's looking like. A lot of money is going back into Bitcoin. Sitting at 95,500 right now. Let's see where this candle closes as well. But we're setting in lower lows here, guys. We are setting in lower lows. Nobody wants to see that. So we'll see what happens. It's funny because someone had pointed out a few days ago that we're starting to kind of look like we're putting in an ascending channel here, right? Which we are. Here, let me get rid of this symmetrical triangle we broke out of. Let me get rid of that. Clean this up so you guys can see what I'm talking about. So we kind of have this ascending channel right here, right? Now, you might be sitting there going, that's a good thing. No, that's a bad thing, guys. That's a bad thing. These generally break to the downside. They ping pong, and then they break to the downside. So we could, as long as we stay above 90K, I'm fine, guys. I don't really care, but I mean, I would like to see us hold 90K minimum. That's what I would like to see. But we'll have to play it out, right? We'll have to play it out. Ain't no thing. My timeline has not changed in the least bit. So as far as I'm concerned, whatever, right? All coins are looking green on the hourly time frame, guys. If we go have a look across the crypto bubbles, everything seems to be turning around on the hourly time frame, but the daily does not look good right now. Let's keep it right here. That looks sexy. We'll leave that there. Across the market again on the hourly time frame, so we could see the market kind of pump this afternoon, maybe recover a little bit because things are looking good on the hourly time frame, right? So we'll see what happens as we move forward. But yeah, all right, I'll get into the chat real quick here, guys. Beebs, what's up, buddy? Good to see you, man. Good to see you, brother. Scam. Guys, make sure, as always, you're hitting the like and subscribe to the channel. It helps the channel grow. It costs you absolutely nothing. And, I mean, it's the Christmas season, right? So help a brother out. Help us grow the channel. Would be absolutely amazing if you would go ahead and do that. Strange Sky, what's up, man? What's up? AKP, good evening. Good evening, good morning, good afternoon, wherever you are. Beebs, I was kind of surprised that Microsoft voted no on the adding Bitcoin. Yeah, I'm going to get into that in a little bit, my friend. I'll give you my opinion on that shortly. Shane, what's up, buddy? Good to see you, man. Bruno's in the house. Maha, who's a Jasmy holder? Pretty much all of us, my friend. Pretty much all of us. Dumb money, ain't nothing wrong with the town painted red. That's right, man. DCA is the way. Norbert, what's the realistic price for Jasmy in Jan? Oh, Norbert. WF Capital, yo, what's up, man? Good to see you. Jasmy price prediction and for when? I don't have a crystal ball, my friend. I do not have a crystal ball. So I cannot tell you when Jasmy will reach its yeah. So anyway, I get asked this kind of thing on a regular basis. What I would say, if you want timelines on where we think the market is going and stuff like that, get over to the Patreon. That's where you get the true alpha. 85 crash. I'm under, but still holding. That's the way it's got to be, man. You can lower your cost average right now by DCAing. That's for sure. But yeah, hold strong, man. Hold strong. That's how it's done, man. That is how it's done. All right, so let's get into some of the news, guys. If you're new here, first thing we do is we get into the news, and then we will get into the live chat after that, and I'll get to everybody's questions, comments, and concerns shortly after that. Strange Sky says, diamond hands, baby. Absolutely. Absolutely. Okay, so let's get into some of the news. We're going to kick it off with some bullish JASMY news. Japan ends health card issuance for shift to the My Number card, guys. Now, I talked about this briefly in a video this morning, but if you missed it, Tokyo on December 2nd terminated the issuance of the traditional public health insurance cards on Monday for a full shift to the system of using the My Number personal identification card, also as a health insurance card. The government hopes to replace the conventional paper or plastic health insurance cards with the chip-embedded My Number card for Social Security and taxation, to which health insurance can function and be added. The shift is aimed to advancing the digitization of medical information, but the benefits have not been communicated sufficiently to the patients. So basically, they're making the My Number card the all-in-one card in Japan, okay? And what this means is that JASMY is the infrastructure for the data security on these My Number cards. People are going to have their entire identities, okay? Their entire identities protected by JASMY secure technology. Their driver's license information, their social security, their health information, their health insurance information, everything in one card. And JASMY being the infrastructure for this is phenomenal. All right, what else do we have? What else do we have? Watcher Guru says Bitwise predicts Bitcoin, Ethereum, and Solana will reach new all-time highs in 2025. They're predicting a $200,000 Bitcoin, a $7,000 Ethereum, and a $750 Solana. You love to see it. You love to see it. All right, what else do we have? Oh, yes. All right, let's get into this. Bitcoin Magazine, Max Kaiser says Bitcoin FOMO has reached nation-state level.
I mean, the element of Bitcoin of FOMO, fear of missing out, has reached the nation-state level and the sovereign wealth fund level, central bank level, and it's the same on that level as it is on any level. I think Warren Buffett said once that people are not that interested really in making money until their neighbor starts making money, right? And then suddenly, it's keeping up with the Joneses. So the fact that a couple of countries are now stacking and showing great results as a result has triggered FOMO at the highest level. I remember when I did a .com company in Los Angeles back in the late 90s, and we got a huge investment from NBC, the media company. And I asked one of the executives, why did you invest in my company? And he said, to tell you the truth, I don't know, but I don't want to miss it. And that was the mentality at that time. So we've entered that phase of the cycle where people are just going to be writing enormous checks because they don't want to miss it. And we'll take the money. That's
We'll take the money. Yes, exactly. All right. We also got this here, guys. We know that Eleanor Tourette, she says there's a big push from the crypto industry and the Republican leaders to prevent the renomination of Democrat Commissioner Caroline Crenshaw. We've talked about this multiple times. She is the one who's voted with Gary Gensler. She's actually more anti-crypto than Gary Gensler is. So she's up for renomination in the SEC. Look at this. They're running ads on trucks. No more anti-crypto than Gary Gensler. Vote no on Crenshaw. So she's got to go. Check this out. That's awesome. That's awesome. She's got to go. I'm there for every little bit of it. Every little bit of it. Jack Muller's talking Bitcoin again.
My message to the public is this. They're realizing the loss for those that are holding and storing and saving in dollars. And hear me out. Traditionally, the way to get out of dollars and persist your wealth elsewhere is invest in Miami beachfront real estate. Invest in the best equities or the best venture capital deals in San Francisco. Not everyone had access to that. Bitcoin is so unique in that you can buy a penny of it. Everyone has access to it. All you got to do is download an app on your phone. And so why I think this is a unique situation where, listen, this isn't the first time ever that we're living through a potential fall of an empire, an inflationary period where currency is actively debased and those holding it are the losers.
Yeah.
What makes this time unique is that we, the people, have engineered an alternate monetary system that's scarce and accessible to all of us that no one can stop. And so my public comms and a lot of my time and energy is getting the message out there that that's what makes this time different. Not that they're going to do anything different, is that you can do something different. And that something different is protecting yourself by owning something like Bitcoin.
Too bad he's a maxi instead of just supporting all of crypto, because he is very intelligent in some aspects. Publicly traded company Mara buys another 11,774 Bitcoin for $1.1 billion, guys. They are buying the dip. Absolutely phenomenal. Absolutely phenomenal. All right, what else do we have? Bitwise. What's Bitwise doing? $5 billion in assets. Manager Bitwise predicts Bitcoin to hit $200,000 in 2025. I would agree. I would agree with that assessment. JASMY exchange reserves going down. So the amount of JASMY on exchanges, guys, available JASMY is down to 13.333 billion. That's it, guys. That is all that's available. That is less than 15% of the max supply of JASMY is left to be purchased on exchanges, for some perspective. All right. Also, if you are a Coinbase user, this concerns you. Friend of the channel, Believes Crypto, tweets out, as Coinbase continues its Brian Armstrong orchestrated scams, you have to ask, what exchanges in America can actually be trusted? When you're losing the OG crypto bros, you have failed your constituency. And when you try to explain it and get community noted, it's time to move on. So this guy here, Austin, tweets out, well, today is the day I ditch Coinbase. I used them since 2016, have the highest level of verification and always have. Needed $50 of USDC really quick for a payment. Bought it and went to send it. The network fees were high, so I needed $15 more to cover them. Tried to send it, it failed, and now I see this notice. It's been nice, guys, but at this point, I think we're done. Fix your systems. So, yes, this has been happening, guys. Coinbase has been restricting people's ability to move their crypto off of Coinbase's exchange. And Coinbase tried to put out a tweet saying that it was misinformation and FUD, and Twitter actually, or X, actually fact-checked them and said that they are, in fact, freezing people's accounts and preventing people from moving crypto. So if you are a Coinbase user, you may want to have a little bit of concern about this, guys. I'm sure there are other exchanges in your area. You just have to do some research to find them. And I know some people are going to message me saying, Rob, what do I do? What do I do? Use Google. Google is your friend, right? Type in wherever you live. Let's say you live hypothetically in New York City. Go to Google and say, what centralized crypto exchanges are legally able to operate in New York City? And a whole list of them will come up, okay? I know a whole bunch of people are going to message me saying, what exchanges can I use? Just use Google, please and thank you, okay? Please and thank you, just use Google, okay? But anyway, yeah, so guys, and listen, I've been warning people about this. People that were not around in the last bull run, you don't understand, okay? Because a lot of these centralized exchanges, what happens as soon as things start going parabolic and euphoria is everywhere, all of these centralized exchanges will all magically at the exact same time will start to say technical difficulties, transactions frozen, can't buy, can't sell, can't take profits, are frozen, right? Because of volume. It's not because they're not solvent, right? It's because they can't handle the volume. Well, I would say to that Coinbase, Binance, KuCoin, all of these major exchanges, they were around in the last bull run. So they've experienced the type of volume they need to be prepared for. And it's been 4 years. So if they're still saying 4 years later that they're not prepared to handle the volume, I call bullshit, right? So that's why I say, guys, if you've never been through this stuff before, you are about to get sent through the ringer and you don't even know it. You think you have everything under control. You don't, right? There are things that are going to happen to you as a new person in crypto and you don't even understand. These exchanges are going to prevent you from selling and taking profits. You're going to have large content creators telling you that not to sell, that we're going into a super cycle, all kinds of things. You're going to be putting in sell orders and you don't know how to identify where liquidity is in the market. So your sell orders are not going to fill and you're going to be sitting there confused and you're going to call it a scam. And at the end of the day, it's not because it's a scam. It's not anything else. It's because you didn't do the time to put in the work to learn properly how to navigate this space, right? So get educated, guys. Get over to the Patreon. We will teach you everything you need to know. Don't just sit there passively going, I got it, and then you get screwed because you didn't do any time, you didn't commit to learning, and then you start saying it's a scam because you didn't put in the work, right? Put in the work, get over to the Patreon. We will teach you how to identify where liquidity is in the market, how to sell where there's FOMO, how to put in your sell orders, how to create an exit strategy, how to deal with these exchanges when they do stuff like this, and so much more, right? So get involved. Don't sit on your hands, guys. Do not sit on your hands. All right, enough of me rambling on. Check this out. I got to give Mark Reddick credit. He sent me this here. JASMY video. Check it out.
JASMY injunction versus XAI. How decentralized ecosystems could surpass the world's largest AI supercomputer. The tech world is abuzz with Elon Musk's latest innovation, XAI, the world's largest AI supercomputer. With over 100,000 NVIDIA H100 GPUs delivering an unprecedented 6 exaflops of power, and plans to scale to a mind-boggling 60 exaflops, XAI sets a new benchmark for centralized AI capabilities. This development has shocked the world, proving the sheer might of centralized supercomputing in advancing artificial intelligence for Tesla, robotics, and beyond. But as XAI breaks barriers, a quieter revolution is brewing, one that could redefine the very structure of the digital world. JASMY's personal data lockers, PDLs, and Jengshin's decentralized GPU sharing marketplace represent a fundamentally different approach. A human-centric, decentralized vision for Society 5.0. By empowering individuals, democratizing access to AI, and creating a global, distributed computational ecosystem, JASMY and Jengshin challenge XAI's dominance and offer a path to surpass it. This article delves into how these two transformative paradigms, centralized versus decentralized, stack up, why JASMY and Jengshin's ecosystem could outshine even the most powerful centralized AI, and how this revolution could define the future of technology. XAI. The colossus of centralized supercomputing, Elon Musk's XAI supercomputer is nothing short of a technological marvel. It connects over 100,000 NVIDIA H100 GPUs, achieving terabyte per second data transfer rates with unparalleled coherence among its GPUs. Designed with scalability in mind, the system plans to scale up to 1 million GPUs, reaching 60 exaflops, making it the most powerful AI infrastructure on the planet. This immense power has far-reaching implications. With applications ranging from Tesla's autonomous driving systems to humanoid robotics and revolutionary AI research, XAI demonstrates the incredible potential of centralized supercomputing. The tightly integrated system functions with the precision of a single, massive brain, pushing the boundaries of what AI can achieve. Yet, this centralized approach comes with significant trade-offs. Scaling such systems requires immense physical infrastructure and energy consumption, making them inherently resource-intensive. Centralized systems also create single points of failure, rendering them vulnerable to cyber attacks or systemic breakdowns. Moreover, control over these systems is concentrated in the hands of a few, raising concerns about equitable access and the democratization of AI. JASMY Injunction: Decentralized Systems for a Human-Centric Future. While XAI showcases the power of centralization, JASMY Injunction propose a radically different vision, one that aligns with the principles of Society 5.0 by decentralizing power and prioritizing human empowerment. Together, they offer a system where computational resources and decision-making are distributed among billions of individuals and organizations. JASMY's vision: in essence, JASMY is not just building a platform. It is cultivating a movement where individuals are empowered to harness the full potential of their data while driving global collaboration and innovation. JASMY's personal data lockers, PDLs, redefine how data is owned and managed. These decentralized data storage units, secured by blockchain and managed by embedded artificial general intelligence, AGI, agents, put individuals in control of their data. Unlike centralized systems, which often exploit user data for corporate gain, JASMY ensures that individuals retain full ownership and benefit directly from their personal information. This human-centric model aligns perfectly with Society 5.0, creating a digital ecosystem where technology serves the individual rather than corporations. JASMY's use of edge computing further decentralizes data processing, reducing reliance on energy-intensive central servers and enhancing system resilience. Junction's vision: democratizing AI resources. Junction complements JASMY's vision with its GPU sharing marketplace, which enables users to share idle computational resources like GPUs. This blockchain-powered platform ensures fairness and transparency, rewarding participants based on their contributions through a proof of contribution (POC) mechanism. By pooling resources from millions of devices, Junction creates a dynamic, cost-efficient computational ecosystem accessible to all. Why decentralization wins? The decentralized approach proposed by JASMY and Junction addresses many of the limitations inherent in centralized systems like XAI. While XAI's scalability is constrained by the need for massive physical infrastructure, JASMY and Junction thrive on organic scaling. Every new PDL or GPU added to the network strengthens the system, enabling it to grow exponentially without the bottlenecks of centralized systems. Resilience is another critical advantage. Centralized supercomputers, despite their power, are vulnerable to systemic failures or cyber attacks. In contrast, decentralized networks distribute computational tasks across billions of nodes, ensuring no single point of failure. This architecture not only enhances security but also allows the system to self-heal in the face of disruptions. Energy efficiency is a significant concern in today's world, and decentralized systems shine in this regard. By leveraging edge computing and the existing devices of billions of users, JASMY and Junction minimize the need for energy-intensive data centers. This decentralized model aligns with global sustainability goals, reducing the environmental footprint of digital infrastructure. Control is perhaps the most transformative aspect of decentralization. In a centralized system like XI, power resides with the entity controlling the infrastructure. JASMY and Junction invert this model, empowering individuals and communities to participate directly in the digital economy. This democratization of technology ensures equitable access and prevents the concentration of power in a few hands. Finally, accessibility is where decentralization truly excels. While centralized systems are restricted to those with access to expensive infrastructure, decentralized networks are inherently inclusive. By enabling anyone with a connected device to participate, JASMY and Junction create a system that is not only more accessible but also more equitable. The adoption rate and the vision of Society 5.0. By 2050, the JASMY plus Junction ecosystem could evolve into a vast interconnected network, with billions of individuals embracing PDLs integrated with AGI agents. These agents, seamlessly communicating across the platform, would collectively create a decentralized global intelligence, empowering individuals while transforming the way humanity collaborates, learns, and innovates. As adoption scales, this decentralized infrastructure would foster collaboration, Enable global knowledge sharing and resource pooling, empowering individuals to co-create solutions. Achieve sustainability. Decentralized systems consume less energy and align with global sustainability goals. Drive human-centric innovation. Individuals, rather than corporations, will lead the technological revolution, ensuring technology serves humanity. In contrast, centralized models like XAI risk perpetuating inequities and consolidating power, making them less aligned with Society 5.0's ideals. Conclusion. A battle for the digital future. Elon Musk's XAI is a testament to the power of centralized supercomputing, but its limitations highlight the need for a new paradigm. JASMY and Janction represent that paradigm, a decentralized, human-centric ecosystem that democratizes AI, empowers individuals, and fosters global collaboration. In the race to define the future of technology, the decentralized model offers a compelling alternative. A world where technology serves humanity, not the other way around. As the vision of billions of PDLs and distributed GPU networks takes shape, it becomes clear that JASMY and Janction are not just challengers to XAI. They are the architects of a new digital future.
Fantastic video helping people understand JASMY and Janction. What do we got? South Korea passes a bill to postpone tax on crypto assets gains by 2 years until 2027. So they'll revisit. So what this means, guys, this is a good thing. This means that they're going to postpone taxing unrealized gains on crypto until 2027, and then they'll revisit it at that time. So this is actually a good thing. It's an incentive for people in South Korea to start accumulating Bitcoin. Or crypto in general, anyway. I know the JASMY is a widely popular crypto out in the Asian countries. $3 trillion asset manager Goldman Sachs says it will evaluate participating in Bitcoin or Ethereum markets if regulators permit. So there you go, guys. Goldman Sachs looking to get in, and you know that regulators will permit because we have a new administration. This from Ledger, exciting news. You can now sell Bitcoin and Ethereum directly through Ledger Live via our partner MoonPay. This is a progressive rollout ensuring platform stability and the best possible user experience. For now, some users will see this feature in their Ledger Live app with wider availability coming later this week. Sell securely via local bank transfers, credit, debit cards, push-to-card transfer transactions, and more in more than 80 countries. Ledger is stepping up, guys. Ledger's my cold storage wallet of choice. They're not a sponsor of the channel or anything, but I use Ledger personally. So that's fantastic. What else do we got? Investors in Argentina to get access to BlackRock's spot Bitcoin ETF. So more ETFs are about to get bought up, guys, by Argentina stepping into the arena. The biggest liquidation since 2021. Why does the market dump and wipe almost $2 billion in trades in just 24 hours? Here's what happened. Coinbase traders started the sell-off. Coinbase traders began selling 1 hour before the major dump. The sell pressure pushed the liquidation like a domino. Liquidation cascade triggered the biggest drop. Once the market hit a key liquidation zone, it was game over. Over-leveraged positions started to close. Stop losses were triggered, creating a chain reaction. Number 3, the market was overheated. Funding fees were sprinkled, a sign of excessive longs. Open interest was rising rapidly, too many traders piling in. Then something interesting happened. 1, strong buying pressure emerged on ETH. ETH doesn't experience much downtime compared to BTC. The volume is there too. Unusual sell-off in XRP. The XRP's low liquidity made the move worse. XRP may have a large market cap, but its liquidity is still thin. This is why XRP can surge hundreds of percentages or crash out of nowhere. Massive volume in ADA, USDC, FDUSD. When the dump started, these three saw insane volume. After liquidations like this, here's what usually happens. Liquidations wipe out weak hands, smart money buys the dip at a discount, and the price snaps back quickly. The dump clears out the weak positions, and the strong hands step in. So yes, very, very good, guys. And if you're looking over at the bubbles on the hourly time frame, things are actually starting to turn around in the market. So I think we'll see a green evening. I think we'll probably see a green evening this evening. Things are turning around very nicely. So yeah, that's kind of what happened, guys. And listen, if we go over to the Bitcoin dominance, let's go have a look again. Now, you got the DXY that's pumping just a little bit, but I want to look at the Bitcoin dominance. Look at that. It is surging to the upside, guys, the Bitcoin dominance. So this is what's going to happen. Bitcoin's going to start rising. Altcoins are going to they'll chop sideways for a little bit, but then they'll start another phase of their melt ups again. We'll start to see that happen all over again as we reach for new higher levels. It just takes patience, right? It just takes patience. These things are happening, guys. Like, it just, you just got to hold on, man. You just got to hold on, right? All right, what else we got? Bitcoin holders secure big profits as prices close to 100K. So Bitcoin long-term holders are cashing out at an average profit of 326%, while prices approach 99,800. According to recent data, the average purchase price for these holders is about $23,400, and the market is steadily absorbing the additional supply without significant price drops. Bitcoin's strong demand continues to drive stable markets momentum, even as more coins are sold by these investors. So a lot of people who bought Bitcoin at an average price of 23,000 are selling near 100,000, and I don't blame them. This is what happens. Then you'll start to see that liquidity pour into the altcoins, right? You see how that works now, guys? Long-term holders are seeing astronomical returns after Bitcoin's price rose from $15,000 in 2022 to nearly $99,800 in 2024. This represents a significant profit margin for holders who accumulated Bitcoin during lower price cycles and are now realizing gains. The cost basis for long-term holders has increased steadily over time, showing the enduring growth of BTC as an asset. Periods of high profit taking are evident in the chart, which show increased selling activity as price reaches current levels. However, despite this increased supply, the market remains stable because demand continues to absorb the released coins. Bitcoin's stability in the face of such selling indicates a strong foundation built on a market confidence and interest from new participants. According to market analyst Axel Adler Jr., the ability of Bitcoin's price to remain stable during this surge as selling activity reflects its robust demand. Bitcoin has followed a similar pattern in previous cycles where selling of long-term holders was counterbalanced by strong demand from buyers. For instance, during the 2021 rally, Bitcoin surged from $8,000 to $60,000, and those who had owned for a decade sold large portions of their wealth. Even then, demand from new investors absorbed that supply, which allowed BTC to maintain the price's momentum. The current trend shows similar dynamics, but this time at a much larger scale, the Bitcoin nearing $100,000. A question now is whether demand can keep pace with increased supply as larger numbers of committed investors sell their holdings. The resilience shown by Bitcoin so far suggests strong support from institutional and retail buyers entering the market. If demand continues at current levels, BTC may maintain the price momentum as it edges closer to the 100,000K mark yet again. So buyers are countering all the selling pressure, which is why Bitcoin is able to maintain where it is at. Check this out, guys. Massive news. I told you this was coming. Russian lawmaker proposes strategic Bitcoin reserve to counter geopolitical challenges. I said when Trump said he was going to make a Bitcoin strategic reserve. We knew that China and Russia were going to follow suit. Well, here we are, right? Once again, batting 1,000, baby, batting 1,000. Now we have the story that you guys have been waiting for. Microsoft shareholders vote against Bitcoin investment proposal. Okay, so I want to show you something here that goes into that. This is par for the course for Microsoft. Microsoft also said no to the internet browser when it came out. They said no to the mobile phone when investing in the mobile phone when it came out. They said no to investing in the smartphone when it came out, and they said no to voting into social media like Meta, Facebook when it came out, right? So they have missed the boat on every single technological revolution in the last 50 years, right? So is it any surprise that they're missing out on Bitcoin as well? Every time they had to pay a huge price to get back into the game or even missed out forever. They said no to Bitcoin. They will pay the price. So this is par for the course for Microsoft. But what do we care at the end of the day, right? I wouldn't be surprised to see their stock kind of plummet a little bit, though, to be honest with you. I wouldn't be surprised. So yeah, that's my thoughts on that, guys. I mean, it's par for the course for how they behave. So we'll kind of see how that plays out. But continuing on, moving on. Inflation remains the biggest concern for our clients, says U.S. Bank Eric Friedman.
Event for the markets this week is the inflation data at the consumer level. We get the CPI report for November. It's due out tomorrow morning, and it is expected to show that inflation ticked up slightly from October. You're talking up 0.3% for the estimates on this. Last month, it was 0.2%. You're also talking year over year up by 2.7% versus up by 2.6% for the previous month. For more on this right now, we want to bring in Eric Friedman. He is Chief Investment Officer of U.S. Bank Asset Management, which has nearly 496. I think it's just almost $500 billion in assets under management. And Eric, want to welcome you here. Thank you for coming in today.
Yeah, great to be here. Absolutely.
So you do have a lot of money that you're managing.
We're happy to round up to 500. It depends on the day. But yeah, I would say it's a great client base, ultra high net worth, institutional, and also mass retail. So it's we see a lot of slices of life, and it's certainly fun to work with that many different client types.
What's the biggest concern you hear from your clients at this point?
Number one is inflation. I think that people are consistently saying, look, this is an environment where, as we kind of look at the sort of tail end of this year and into the start of next year, will we be able to sustain interest rates really below that magical 5% number? That's for the 10-year Treasury. Seems to be where the good things happen for capital markets. So we think that, again, still that risk-on perspective across a lot of different asset classes works. Inflation that pushes above, that 2.5% to 3% sustained level, that could be the elevated level, if you will. It keeps the interest rate bond vigilantes really still in play, and that push towards 5% could be more of a challenge for markets.
If your clients are worried about inflation, then they have to be worried about outpacing that inflation in their investments. What do you tell them?
Yeah, Becky, it's one of those things where it's been stubborn to get people out of cash. When you've had this almost nostalgic view of cash above 4.5%, that's sort of been a level that people have really anchored on, if you will. So we've been emphasizing a variety of different things. Again, everything from dividend-paying stocks to international equities, also a lot of private assets, which we think makes sense, but even things that aren't so expensive, that don't necessarily roll off the tongue. So things like structured credit, which does provide a pretty solid total yield that isn't just susceptible to interest rate risk. Those are things that we really entice people to move out of cash into more productive assets.
That's an interesting point, though. All this cash that's sitting there waiting on the sidelines, part of that is people have been waiting for a pullback that they haven't gotten.
Yeah, it's been the sort of, the waiting for Godot, and Godot never shows up. And I think that, there are a couple of catalysts out there. Again, there's CPI data. We're in this lull period where we don't have a lot of corporate earnings. We're sort of waiting for more concrete policies from the new administration. So there may be some opportunities, some pockets to pick up. Clearly, in anything that hasn't been dollar related, you've had lots of pullbacks. So the things that really haven't worked include, international equities, especially the European side. So for those that are looking for more of a valuation play, that's starting to become more interesting. But probably a little brave to step in before a lot of tariff releases emerge.
And that's what people say. Look, we have run so far over the last couple of years. Markets are up substantially. The PE ratio has gone up substantially on all of these things. And we're getting a lot of what you might anticipate coming from this new administration came from Election Day on. So you're seeing a front end loading of some of these gains. And that's why people will say, maybe we want to be cautious, maybe we want to see what comes next. But if you also have all this cash that's been building up on the sidelines, I wonder if any slight pullback that begins 2, 3, 4, 5% gets washed out because that brings new money in too.
Yeah, I think it's a great thesis. I mean, this sort of way we've been playing it is like ex ante before the next wave of, we think, animal spirits and sort of more progressive policies come through. We've been overweight global equities, especially the U.S. There's another leg to that trade, we think. But again, nothing solves high prices like high prices. And I think that enticement of getting people in, such a continued inflow, I should say, of assets into equities, particularly U.S. equities, that train just continues to roll. So we think there's still an opportunity to again, be aggressive, but there's probably another leg that has to be proved with a little more policy certainty. That's probably a good thing for us to focus in on.
And we started this conversation with you saying inflation is the biggest concern. Maybe that's the thing outside of geopolitical things that we can't control, don't know anything about. But if inflation were to rise again and be stronger than anticipated, and the Fed either had to stop cutting rates or start hiking rates as a result, maybe that's the game changer.
Yeah, agreed. That would be the sort of push, if you will. We haven't had interest rates in this country above 5% in 17 years. We had one day last year for like literally a millisecond. And since then, we've obviously had some rate increases, and we've obviously had a bit of a pause from the Fed. But that move below 5%, which precedes the great financial crisis, that's really has been at least correlated with higher asset prices. So that's a test the markets don't want to see. We think we're in good shape if we stay below that 5%.
We used to do
number.
fine at 7 and 8% for years, and companies deployed cash and took risks, and things were allocated. It was fine, but it seems like those are a bygone era. And then I was just thinking about inflation and just how debilitating it really is. So it goes up 20% in 1 year, and you're like, oh my God, I can't afford any of this stuff. Then the next year it goes up another 3 on top of the 20. Then the next year it goes up another 3 on top of the 23. Then the next year it goes up another 3 on top of that 23. So now you're at 20. Nothing's solved.
That's right.
The rate of increase, has moderated, but you're still buying the things that you couldn't afford when it was up 20, and they're up 26.
That's right.
What it would take for deflation?
I don't want deflation. I know, but we're in this. It's things that you're still scanning those things, and you get done, and you're still like, holy crap! What things are different. Things cost a lot.
And it's
more.
Also so unevenly distributed too. If you think about the impact on the balance sheet of a lower income consumer, I mean, it is.
Think about that.
Yeah, it is both in terms of shelter costs as well as food, transportation. That's 60-70% of it.
Take home or whatever it is,
Yeah.
and you go to the supermarket, and really you spend $250. Even when you're scrimping for a family of 4.
Yeah.
And you're like, wow, what do I have left?
It's a big number. Yeah, and it's persistent. Absolutely.
That's what drives me crazy about like celebrities and stuff like that, and rich people going on television and saying, especially during the election, and they're like, hey man, listen, you got to vote. Like, who cares about the economy? Vote for the Democrats because they're better than Trump. They're like, the economy's good. The economy's good. The economy's good. People can't afford groceries. Just because you're rich and the price of eggs going up doesn't affect you, doesn't mean that the economy's good. Everyone else is struggling to get by. That drives me nuts when they talk like that, right? Why did the crypto Why did the crypto market plunge overnight? Is the bull run still intact? All right, so why did the crypto market suddenly crash, wiping billions in just hours? And what does this mean for Bitcoin and altcoins investors moving forward? In the last 2 days, the crypto market has hit a speed bump, experiencing a flash crash that has shaved billions off the total value. The crypto market cap has dipped nearly 8.7% in the last 24 hours, hitting $3.52 trillion, according to CoinGecko. While Bitcoin has weathered the storm relatively well, losing a little over 2% to trade at 95,800 as of December 10th. The same can't be said for most altcoins. Ethereum has dropped by around 6%, settling at $3,580 as of writing, while Ripple's XRP took a much steeper dive, down 12.5% to $2.09, and extending its weekly losses to a concerning 17%. Solana, one of the industry's top blockchain platforms, has also declined by 6% to trade at $210. The carnage wasn't limited to major altcoins. The real bloodbath unfolded in the meme coin segment, with Solana-based meme coins in the Pump.Fun ecosystem plummeting by nearly 25%. Tokens like Peanut the Squirrel, Goatius Maximus, and Just a Chill Guy recorded losses ranging from 20% to 25%. Even more established Solana meme coins like Dog with Hat and Bonk declined by 20% and 18%, trading at $2.74 and 403475 respectively. Beyond the meme coin mayhem, Bitcoin sidechains and gaming tokens were among the hardest hit. Collectively, these sidechains dropped by 24%, with Stacks STX down 16% to $2.07. The core plunging 20% to $1.12. Gaming tokens, a niche closely tied to the metaverse and blockchain-based play-to-earn economies, also suffered sharp declines. Gala lost nearly 21%, trading at 4 cents 342, while Sandbox and Decentraland dropped 19 and 18% respectively. The question now is what has caused this market turbulence, and more importantly, where does the market go from here? Let's examine the technical and fundamental indicators are shaping up for Bitcoin and the altcoins. According to a detailed analysis shared by the algorithmic trader, the events leading to the sudden crash on December 9th unfolded in stages, influenced by a mix of market structure weaknesses, high leverage, and liquidity issues. The sell-off began with an aggressive selling on Coinbase, where traders started offloading assets nearly an hour before the major crash. This persistent selling pressure gradually pushed Bitcoin's price into a precarious zone, setting the stage for what's known as a liquidation cascade. When prices dip below certain thresholds, over-leveraged positions, those funded by borrowed capital, are forcibly closed by exchanges. This creates a domino effect as each liquidation exerts further downward pressure, triggering more liquidations in a self-reinforcing cycle. One of the telltale signs that the market was overheated before the crash was visible in the funding fee, which reflects the cost of maintaining long or short positions in perpetual futures contracts. Elevating funding rates typically indicates a heavily bullish sentiment, with many traders betting on price increases. When the market turns against them, the over-leveraged positions unwound rapidly, resulting in liquidations on an unprecedented scale. To put this into perspective, according to CoinGlass data, over $1.64 billion in futures contracts were liquidated in just 24 hours. Out of this, $1.46 billion were long positions, traders betting the price would increase, while only $174 million were short. That's why you don't mess with leverage, guys. That's why you don't mess with leverage. This imbalance clearly reflects how lopsided the market had become. With the majority of participants caught on the wrong side of the trade, the situation was exacerbated by poor liquidity conditions, especially on smaller altcoins. Coins like XRP, which have massive market caps compared to major companies, still suffered from relatively low liquidity. This means that even a few large sell orders can create oversized impacts on their prices. According to the trader, something absolutely strange happened as a series of big sell orders hit XRP, leading to 5% drop in the price within minutes. Another critical aspect of the crash was the role of the market makers, entities that provide liquidity by continuously buying and selling assets. When such a massive sell-off occurs, market makers are focused forced to hedge their position, which can amplify price movements across multiple exchanges. For perpetual swaps, a type of derivative, this hedging process triggers stop losses and additional liquidations, making the impact much sharper in a short time frame. While the flash crash on the 9th momentarily disrupted what has been a remarkable run, it's critical to zoom out and examine the broader picture to understand what's cooking in the market. First, the macroeconomic backdrop continues to play an instrumental role. The US dollar has faced consistent depreciation in its purchasing power. As pointed out by the Kobayashi letter, both gold and Bitcoin, often touted as hedges against fiat currency debasement, are in a perpetual bull market when indexed against the US dollar, reflecting broader acknowledgement of Bitcoin as a store of value. With inflationary pressures persisting and fiscal policies leaning heavily on debt financing, assets like Bitcoin are effectively pricing in a sustained erosion of dollar strength. Adding fuel to the crypto narrative is the unprecedented growth of institutional adoption. The spot Bitcoin ETF, traded under the ticker IBIT, which is BlackRock's, I believe, has shattered records by surpassing $50 billion in assets under management within just 228 days. For context, the gold ETF took more than 5 years to achieve the same milestone. This institutional tailwind, combined with 32% surge in Bitcoin's price over the past month to reach historic level of $100,000, has injected an additional $1.4 trillion into the broader crypto market, lending further legitimacy to the strong health of the crypto market. Meanwhile, the CME FedWatch tool currently suggests an 86% probability of a 25% basis point rate cut in the upcoming Fed meeting on December 18th, up from 64% just a month ago. Rate cuts typically reduce the cost of borrowing, making risk assets like crypto more attractive. Furthermore, lower interest rates also weakening the dollar, reinforcing the bullish case for Bitcoin as a hedge against devaluation. If the Fed indeed proceeds with another rate cut, it could further bolster liquidity in the markets, creating a favorable environment for crypto assets. However, while Bitcoin demonstrates relative stability, the rest of the market remains fragmented, with pockets of over-leveraged and underdeveloped infrastructure still posing risks. As the dust settles from the recent crypto market shakeup, the big question is, what's next for Bitcoin and altcoins? Starting with Bitcoin, the current sentiment suggests that the journey to higher highs is far from over. Analysts like Dr. Profit argue that the recent sideways consolidation is merely a pit stop, with Bitcoin's price likely to break out towards the targets between $125,000 and $135,000. Such bullish predictions are grounded in Bitcoin's history of cyclical price movements, which often see sharp corrections and consolidations before resuming their upward path. For example, Bitcoin's 2020 bull run saw multiple corrections of 20 to 30% before ultimately peaking. However, not everyone agrees with the immediate path forward. Crypto analyst Nick hints at the possibility of a multi-week correction if Bitcoin fails to maintain momentum above key levels, such as $104,000. He warns that a rejection below $99,000 could signal a prolonged cooling off period lasting until the new year. In this sense, a short-term dip wouldn't necessarily negate the broader bullish narrative, but might provide a healthy breather for the market. Had to cough there, sorry. Turning to altcoins, the outlook appears even more intriguing. Michael Vandepop suggests that altcoins are on the verge of breaking out of their long bearish market. According to Vandepop, with a weakening US dollar and the expectations of increased liquidity, the stage seems set for a gain a giant altcoin rally. Pop's optimism is echoed by Kazian, who drew parallels to December 2020 when a 30% drawdown in altcoins preceded a 3-month rally that delivered gains exceeding 400%. The recent 25% drawdown in altcoins, while painful, might similarly act as a precursor to an explosive growth. Still, it's essential to temper optimism with caution. The crypto market inherent volatility means the sentiment can shift overnight, as seen during a recent flash crash. Hence, trade wisely and never invest more than you can afford to lose. But Vandepop here, what I wanted to highlight is saying that in 2020 we saw a 30% drawdown, and then we saw an average of a 400% pump to the upside across the altcoin market, guys. So are we poised for a massive run to the upside on the altcoins? Now, friend of the channel, JASMY US, says 20 to 30% corrections are normal in the bull market. The market makers of the world bank on human emotion to shake people out of the market. These are opportunities to accumulate, not to panic. I would agree 100% with that, guys. For my Turbo fans out there, Coinbase will add support for Turbo on the Ethereum network, ERC20 token. Do not send this asset over other networks or your funds may be lost. Coinbase adding Turbo, very bullish for Turbo. Finishing up with Eric Trump says, I believe in cryptocurrency.
Bitcoin conference because I believe in cryptocurrencies. I believe that cryptocurrencies are the future. Banking is slow as hell. It's antiquated. It doesn't work. It doesn't make any sense that banks run on 9-to-5 schedules 5 days a week. When cryptocurrency, you can trade it in the middle of the night on a Saturday at 12 p.m. While having dinner with your wife or sitting on the couch, you can trade cryptocurrency. The banks are lethargic. They don't work for everybody. They leave those people behind. They're expensive. They're lethargic. They're not inclusive at all. And I think the modern banking system is changing very quickly. I think it's one of the reasons you see BlackRock spending billions in cryptocurrencies, and Fidelity and Schwab and just about every bank under the sun. It's the future. I mean, why do I have to go all over Abu Dhabi to try and find an ATM if I want to pull out $100? By the time you pull out the money, you lose 30% on it based on currency exchange rates plus fees for the ATM. When you can literally pop open your wallet, you can send a link. It takes you 2 seconds to do. And you don't have all those problems. You don't have all those structural problems. And so there's no question to me that times 100, right? Blockchain, there's nothing that can be done in banking that can't be done more efficiently using blockchain. And blockchain is changing the world, whether or not people like it or not. And there's a lot of people that see it, the people who are here at this conference. There's a lot of people who don't. The people who don't see it are the people who are going to get left behind. And so I believe in this technology, and my family believes in it. My father wants America to be the crypto capital of the world. And I'm happy to support it today.
Let's go, baby. Let's freaking go. Let's get back over to the JASMY chart. Let's get into the chat, see what everybody's talking about. All right, Brandon, where can I buy JASMY? You can buy JASMY just about anywhere, my friend. Just about anywhere. William, what's up, buddy? Good to see you, man. Good to see you. H. Barbarine in the house. I'm so green. This dip ain't shaking me. That's what I like to hear, buddy. That's what I like to hear. Chris, that Jack kid is such a puppet. Still nothing. Stage. Yeah, I know. It's weird that he talk. It looks like a shoe closet that he's sitting in with no shoes in it. Funky, what's up, man? Good to see you, man. Hasn't going under 1 penny. Jump ship, save your money. Okay. Ledger Live, absolutely, man. Epic Nacho, what's up, man? Sub JASMY fam and Rob, man, who's buying these dips? I know I am, man. I know I am. Shane, is Coinbase the only exchange that blocks your sells, or is it something all? No, all centralized exchanges will start to do that, and they'll all claim technical difficulties, right? They'll prevent you from taking profits. That is why, you guys, I cannot, I don't understand how some people don't get this. If you don't have a plan to exit this market, you're going to get screwed, right? You're going to get screwed. And there's people that are not going to listen, and they're going to sit there and they're going to say, I got it. I'll just wing it. I'll just sell at this price. I don't wish bad on anybody, man, but like you were warned, right? It's not as easy as you think that it is. You have to be able to identify where FOMO is in the market, because guess what? When you're selling, there has to be someone on the other end buying it, right? And if no one's there with a buy order, your sell order is not going to fill. So get over to the Patreon and start learning how to identify where you should be creating your exit strategies and your profit taking. Funky, just don't hold for the tip top and you got nothing to worry about. Pretty much got a wallet not to worry about things like this. Shocked, Microsoft voted no, thought that was a benefit. Yeah, I mean, hey, they voted, like you saw the list of things they voted no on, and they lost out on every single one of them. So they worried about the balance sheet for 2026 timeframe. Funky says maybe Microsoft will vote yes. Maybe they'll do it later when they realize that they screwed up, right? These dips weed out the scared hands. Yep, absolutely. I think Microsoft voted no because they want to buy the bear market instead. I mean, that would be the smart way to do it. These people who just bought a week ago are freaking out. Kill me, man. Magic Power, what's up, man? Yeet, yeet. What's up, Richard? Seasons Yeetings. Is it true that quant have a limited supply? If so, almost every project has a limited supply, Dennis. That's what the max supply is, right? How many they have left? I mean, you just have to go over to CoinGecko for that, my friend, or CoinMarketCap, right? And you can see, if you go to quant, right? So circulating supply, 100% of the supply is in circulation right now. They got 14,544,000 essentially. So 612,000. So almost the entire supply is in circulation. So yes, they do have a max supply. Almost every project has a max supply. So that's not unique to quant. That's facts. I take home about $8,000 a month, but have no savings. Yeah, it's ridiculous. What's up, my brother? Thanks for keeping us up. Hey, I got you, man. I got you. Liquidity, what's up, man? I'm personally treating these dumps as gifts to DCA. Yes, exactly. Bought more. Aaron, hello, Aaron. How you doing, my friend? You know how long you've been in the game, Rob? You know how long we've been in the game, Rob? We still up, and these dips ain't nothing. Exactly. Nicholas, what's up, big dog? Good to see you, man. Good to see you. Jackie, are you going to get people on your channel at the end probably saying you didn't help them? Yeah, well, that's the thing, right? Is that there will be people, and I was saying this on the Patreon the other day, there will be people who I tell this is where you should be exiting, and they won't exit because they think that they know better, and they want to hold on because BitBoy told them to hold on longer, and then they get wrecked, and then they'll say, you didn't tell me to sell, right? You can't help, you can't fix stupid, right? Hello, Rob. Do you think you can go down more? I mean, possibly we could. I think Bitcoin could probably go down to about 87K in a worst case scenario. But do I think it's likely? No, I don't. I feel like we've kind of come, I don't think we'll fall further than 90K, to be honest with you. I think it's probable that we'll touch 90K, but I don't think we'll fall much further than that, to be honest. Holmes, what's up, buddy? Good to see you, man. Good to see you. By the way, you are a great person. Hey, thank you so much. I try to be that guy, right? All right, guys. So listen, that's the news. That's the chat. Make sure you're hitting the like and subscribe to the channel. Helps the channel grow, guys. I will be live tonight over on the Patreon. So get over there, book your one-on-one coaching sessions with me. The link is in the chat. It's in the pinned comments. It's in the description. Get over to the Patreon, guys. We do group Zoom calls every single night where we have some fantastic discussions about price predictions, price targets, where we think that this market is going, when we think the top is, when we're taking profits, how we're going to roll profits into other projects. We do passive income opportunities, node operations, DeFi staking. Get over to the Patreon, guys. The link is in the comments. It's in the description. And I will see you guys this evening for the 8 p.m. live stream. Deuces.